If you are a Bitcoin trader with a long position on right now, be very careful. Market makers know where your stop loss is, plus there is a CME Futures Gap just below us and Bitcoin might drop by around 6%. What is the probability of this? I will reveal to you in this video. Hello ladies and gentlemen, this is Simon from My Crypto Paradise, and in the previous video I have revealed to you the special setup that just appeared, and I told you if we are able to reclaim this level we are about to pump to the upside. As you can see, that's exactly what happened with ParadiseTeam VIPs. We have exploited this wonderful opportunity, and as I have told you in the previous video, we have set up the limit breaker at that level and we have just secured at exactly $88,000 our second target for 270% profit. It was a nice short-term opportunity because we have been able to recognize this inverted head and shoulders pattern, but the question is, what's gonna happen now? Are we about to keep pumping to the upside, or is this time to go for a correction to the downside? For that, let's start analyzing, and we will start with ultra high time frame, our weekly time frame. If you are subscribed in this channel, you know that we have been together, you and me, after buying at $19,500, selling everything exactly at the top, and from bullish strategies we have changed our trading strategies into bearish focused. Since January we have been expecting the $77,000 and $44,000 to be hit. Go watch the previous videos if you haven't. It will really help you understand the reasoning behind this and what's about to happen on a higher time frame with a much better clarity, because in this video I believe I have been explaining the idea as far as to end of 2026. So right now, as you can see, we have already started the first wave of our zigzag. As you know, I believe that's the formation we will be moving towards $44,000 in. The zigzag pattern subdivides itself into a motive, corrective and motive mode waves, 3 waves, and I do believe that the A wave is already finished. Let me explain to you why. First of all, we have hit that $77,000 target. If you are in our free Telegram channels, you know that we have been also celebrating that live with you as that happened in a real time. Together with that, I believe we have finished this impulse. Okay, so it is not a leading diagonal because this fifth wave was truncated, and we will also break down in this video why my confidence that this fifth wave really finished right here is right now at the highs, and that means we have been forming an impulse that finished right here with the fifth truncated wave, and right now we are starting the B wave correction in the higher degree zigzag formation. Okay, so if that's the case, the A wave is finished and right now we are starting a B wave. So few things are important to understand about the B wave in a zigzag mode. So first of all, this is a reactionary wave, and unlike A wave and C wave of the zigzag, which are motive mode waves, the B wave is a corrective mode waves. Okay, so the B wave itself most of the times taking a form of a zigzag. Sometimes it can be a triangle. Right now, let's suppose it's just a basic zigzag because that's the most common pattern, and as the price action develops we will be shaping our predictions. Okay, so if it's gonna take a form of a simple zigzag, this B wave, based on the price action, it seems like we are finishing the A wave of the larger B wave formation, which once finished I believe will take us towards $93,000, ladies and gentlemen. So the subwaves will look something like this in my opinion, and after that we will start correcting towards $44,000. Alright, after that, you know that by the end of 2026 I believe we will finish the higher degree, the super cycle degree third wave that will take us towards $240,000, ladies and gentlemen, but about that later. Right now let's count with the waves that are behind the corner, and let's zoom in right now into our high time frame chart, ladies and gentlemen. And if this was the end of the A wave, the B wave started from here, from the truncated fifth, and the ABC zigzag will probably look something like this and take us towards $93,000, retesting this key high time frame resistance zone before dropping lower towards that $44,000. And as you already know, the A wave of the zigzag is being formed in an impulse mode or leading diagonal mode. Alright, and if we calculate the subwaves, we can actually see that we have formed already first, second, and right now we are in a progress of the third wave, all right? At this time, we are still not able to understand if this is going to be a simple impulse or it is going to be a leading diagonal that basically overlaps the first and second wave. For that, we will need to zoom in, but before that, you understand from the previous video that I have been sharing with you also this bearish divergence, and it is still forming. Together with that, this previous resistance at $85,000, by reclaiming that, and not only that, also this orange moving average trend line, it means that it is right now an acting support, okay? So I've turned this into green color to understand clearly that this is going to be flipped into a moderate support instead of a resistance, and also this moving average trend line that at the moment lies exactly at $85,000 will also work as a support. This bearish divergence that we are forming because the price action, unlike the histogram of the MACD indicator, failed to make a higher high, is still in play, ladies and gentlemen. And if we will not be able to overcome that $93,000, this is gonna keep on growing and keep building up the momentum, and it will really help us to create a very strong reversal right here at this resistance zone that will fuel the movement towards $44,000, ladies and gentlemen. But we are not quite there yet. We will be analyzing this and the important confirmations in the next videos. Right now, let's zoom in into this new impulse by switching into our medium time frame chart. So you remember in the previous video, same as on a low time frame, I have been here sharing with you this possible trade idea if we are able to overcome that important level, together with a beautiful stop loss, tight stop loss that would protect us against any sharp move to the downside, okay? In a professional trading, having a proper stop loss is extremely important. Most of the traders having the stop losses either too tight or too wide, all right? If it's too tight, you're gonna get wicked out before the real move starts. If it's too wide, basically you cannot have a proper risk to reward opportunity. So not only understanding where the market is going to move with the highest probability is important, but having the great execution targets and invalidation levels in place is another key to a long-term profitability and long-term success in trading. So right now we are understanding that this is not the expanding triangle. This is indeed the first wave of an impulse, because after we have been able to go above this previous high, it was clear that this is not the expanded triangle. So no more a discussion between E or first wave. This is a clear first wave right now for me, and this was truncated fifth. So with this move, the third wave almost touched the Fibonacci retracement level 1.272. How did I get this? Very easily. Basically, I have just looked at the previous cycle and I have taken my Fibonacci retracement tool right here. I've placed it from the top to the local bottom, and as you can see, it showed me exactly where is the next important resistance and the next important support zone. This cycle was the first wave of an impulse. After that, we have finished this second wave with that inverted head and shoulders pattern, and now we have started the third wave. You know that impulse is made out of 5 subwaves, right? 1, 2, 3, 4, 5. So that's the first rule. Another rule is that the fifth wave, the final wave, can be sometimes truncated, okay? So sometimes the fifth wave doesn't need to go beyond the third wave top. Right now, what we can see by analyzing the third wave of this impulse is that we are in a decision point, because from here we have been on a lower degree forming first, second, third, fourth, and right now we are in a decision point if this wave is going to be a truncated fifth or we are about to start moving higher towards that $91,000 that I have been speaking about in the previous videos. To answer this question with a better precision, if we are about to keep going to the upside or actually this is going to be a truncated fifth and we are about to start dropping towards that $84,000, $85,000, filling the CME Futures Gap, going for that liquidity, and after that we will create the fifth wave that will exceed this impulse on a higher degree. We will need to zoom in, okay? But firstly, let me just explain to you the kind of basic things of what would it mean if this would be really a truncated fifth, the higher degree third wave, which is this one basically would really finish right here, and we would start moving down, forming the fourth wave before the higher degree fifth wave. So basically what would that mean is that the fourth wave would need to go in the price territory of the first and second wave, okay? And that would mean that this higher degree A wave of the ABC corrective mode pattern is actually a leading diagonal, not an impulse. And that would mean that if this would be a leading diagonal indeed, there is the rule that it never can have a truncated fifth wave. That would mean that we would for sure go for this liquidity right here towards this Fibonacci retracement level, and probably even higher towards that $93,000, ladies and gentlemen. And from the trading perspective, what would that mean? It would create a beautiful swing buying opportunity on the retest of that $85,000, ladies and gentlemen. Maybe even a little bit lower, because we understand there is loads of liquidation levels towards around, let me see, it's around $82,000, ladies and gentlemen, okay? So definitely we would wait for some wick out, for some confirmations that we are about to go to the upside. But basically, if we are right now about to go and start moving to the downside, this would create a beautiful buying opportunity, because we understand the fifth wave cannot be truncated and we would need to start going all the way up towards here. That would be a beautiful trade opportunity, long trade opportunity towards this level right here. Beautiful, because we are right above our huge support zone right here, above this ascending trend line. So once again, we would have the luxury to create a beautiful trade with having a very tight stop loss with a nice target. So beautiful swing trade, ladies and gentlemen. So that's the first scenario that I will explain to you why this one is more likely after we are done with analyzing the lower time frame. The second scenario would be that we would not have this wave, a truncated one, but we would continue go to the upside, ladies and gentlemen, and I believe we would definitely revisit that $91,000, maybe even $93,000 resistance level, and after that we would start to drop. So after confirmations, and always this is just a tactic, okay? In a professional trading, you need to have, together with tactics, a beautiful trading strategy and a perfect execution levels, okay? And you need to wait for confirmations. So after we have a great high probability confirmation that we are about to start reject from this resistance, again, because we are right below this beautiful resistance, we would have the luxury of creating a beautiful risk to reward trade idea, and we would be able to place our stop loss probably above this high, not to be in a danger of some wick out before the real move starts. And because we understand that this would be the end of the whole zigzag mode, right, we would be able to place our targets even lower, okay, towards that $44,000, ladies and gentlemen. So it would create a beautiful opportunity. Either way, once we go here to this level right here, we will be definitely looking for that short trade on multiple time frames. But if we first start going to the downside, it will also create a nice long opportunity. You know that we are in day and swing trading against any long trade ideas, because we understand the dynamics. We are gonna make most of our money the same way we have done through this correction to the downside, money on short trades. The same way we will be making most of our money, because we will be aggressive on this actionary wave of that higher degree ABC zigzag. But right now, if we are about to dump a little bit lower, it will actually create a very nice buying opportunity, because we understand that the fifth wave right here cannot be truncated and it will continue go to the upside. And we understand that the $85,000 demand zone is very strong, also because we have just closed the weekly candle above it, okay? I have not mentioned that, but we have closed the weekly candle above it. That is also turning on ultra high time frame this previous resistance into a support. So it just adds up to the probabilities of a move towards that $93,000 to the upside, ladies and gentlemen. So right now, let's zoom in towards lower time frame to understand what's the probability of moving right now to the downside before we go towards that $93,000. So first of all, we need to calculate the subwaves. So this was not only the head of the head and shoulders pattern, but also a start of the first wave of this impulse right here. After that, we have created a second wave, third wave right here, fourth wave and fifth wave. So this impulse is done. To the bullish probabilities that we had right here, also add up the analysis we are doing on chain, also sentiment, fundamental stuff, etc. One of the stuff I have shared with you in this video, I have revealed to you some of our insights right here in this video, was also the social cycles that we are also sharing with you on our website, right? So you could check that as well. And as you remember in the previous video, I've told you I want to see us go through the red numbers right here, because it always moved in these kind of cycles in the past month, right? So there is a high probability that before we start going to the upside, we will need to get that social index into the red numbers. And as you can see, we have really done that right here. You can see we have done that right here for 2 candles, and it was exactly at that $85,000. And after that, there was a high conviction that we will start moving to the upside. So that also supported the short-term trade that we have taken on Bitcoin with ParadiseTeam VIPs, because we just got the data, right? And only if everything adds up together, we have the synergies and the probabilities are high, we are pulling the trigger with ParadiseTeam VIPs. Not until then. After that, we have started pushing to the upside, and as you can see, we are right now at the top where we have peaked for once, twice, thrice, for 4 times already, ladies and gentlemen. So right now the probabilities are that we have topped in the market as well, and we're gonna start the cycle one more time, and we will again need to go through the whole cycle, so yellow, orange, red, before we restart it, right? So that also adds up to the probabilities that right now we will start moving to the downside. So this impulse is finished, which is the higher degree third wave, 1, 2, 3. After that, we have went through the correction that, as you can see, unfolded in a clear ABC, and then we started the fifth wave. And if we calculate the subwaves here, it's actually seems like it's finished. Why? Because we can clearly see on ultra low time frame that we have finished the 5 subwaves, right? 1, 2, 3, 4, 5, ladies and gentlemen. So because of understanding these subwaves, the truncated fifth is really possible. Together with that, we are having a huge bearish divergence. As you can see, the price is making higher highs. The histogram on MACD pattern is making lower highs. That is a classic bearish divergence, very strong one. As you can see on the indicator, if we are making lower high but the price is making higher high, that is a strong classic bearish divergence, ladies and gentlemen. So the probabilities of that we will start breaking to the downside right now are quite high, and really it is higher than continuation to the upside right now. Does it mean that from here we would create a short trade? No, it doesn't mean that, right? We are always looking as a professional traders towards that extremes. We can see exaggerated bearish divergence also on a classic RSI. So in my opinion, we will go for that CME Futures Gap right now. As you know, from the liquidation levels, we can go a little bit lower than that $85,000. There's a possibility we will have a wick towards 82,500, ladies and gentlemen. But as you can see on our low time frame, it perfectly synergizes with our support zone right here that exactly finishes at around $82,500, ladies and gentlemen. So the game plan is clear. In my opinion, the highest probability right now is, because of the dynamics we are understanding, we have retested this resistance, etc., that we will start moving towards the downside. We might go even as low as $82,500, ladies and gentlemen. After that, with ParadiseTeam VIPs, we will be waiting for a nice confirmations, and once we have them for the reversal to the upside, we will be targeting that $93,000 resistance next, ladies and gentlemen. We will be moving with the whales as always. We are waiting for the whales, what they do, then we basically just repeat their trades. But from the execution perspective, there will be a beautiful risk to reward opportunity, ladies and gentlemen, because as you can see, we will be able to place the stop loss below this very strong support zone, below this Fibonacci retracement sequence, and below this low, and it will create a beautiful risk to reward trade opportunity that we are willing to take, okay, even though you know that we are focusing on bearish trades since $109,000. So I will keep you updated, ladies and gentlemen. The play is right now quite clear and we are just waiting for the opportunity and then we will aggressively start pulling triggers. So ladies and gentlemen, I will keep you updated again on Thursday. As you know, I do updates every Tuesday, Thursday and Saturday. Smash the like button if you didn't absolutely hate this video, and I will see you again on Thursday. Cheers.